Good morning, good afternoon, good evening, depending where you are on the planet, and welcome to the Monday, the 24th of January, Bull versus Bear webinar with Steve Miley on the call for TradeDay.com. So welcome everyone. We're going to go through our normal, usual, regular run through in here today, look at the calendar, what we've had, what we've got coming up. We'll start off with the macro calendar here from the site. And then we'll also go take a look at the investing.com calendar in here for on the earnings side. So we'll take a look at that as well. Now, I'm going to run through these calendars, not just for the day, but I'm going to do on Mondays as I do Mondays on the webinars, but also I tend to have done this throughout my career. It's a look over the weekend for the whole week to give you an idea of the shape of the week, what's going to be important coming up the week. And even though we are day trading here at TradeDay.com, we are also, it's important to look ahead to what's going on in the week, because if we have a lot of data or big events coming up and maybe in some part of the week, then it's going to affect potentially the volatility and what we're seeing in another part of the week. That's not necessarily to say that's going to be the case right now, because we do have a lot of large kind of macroeconomic, bigger geopolitical events, which we'll talk about shortly, that are impacting markets. But I think it's good practice. Maybe over the weekend, take some time over the weekend on Sunday, maybe before trading starts, to take a look at what we've got coming up through the week. So if we take a look at today, first of all, and we've had most of this stuff already from Europe. We have the flash PMI. PMI is Purchasing Managers Index. So purchasing managers are people who work at companies who do that job of purchasing as a purchasing manager. So they're looking up and down the supply chain, seeing how well their products are selling, and also seeing and services are selling, and also seeing what things are looking like further down the supply chain and up the supply chain. So these are people making decisions and being able to see what's coming up in the future, making decisions about the future as well. So there have been shown to be a really good lead indicator of what was going to happen to the actual economies in which these different companies are working and operating, what those purchasing managers' thoughts and sentiment is, because it's a sentiment index. It's like, how are you feeling about, are you seeing the market contracting? Are you seeing your market expanding, etc.? So it's kind of a sentiment index, but it's a good lead indicator of actually what then happens in economies, maybe a few weeks or a month or two down the line. So they're good lead indicator, the PMI, the Purchasing Managers Index data. Now, we get from the company market. Now, the big one in the US is the ISM, the Institute of Supply Managers. But the market do it for global. And MARKIT, that is market. And market in here have released their flash PMI. These are kind of a heads up. These are for January. Now, we're obviously still in January, so these are a clue. So this is the data that they've received so far for January. And as you can see in here, although we do have some green, there's also quite a lot of red in here as well. So the German, importantly, really the German, which is like the powerhouse of Europe, German manufacturing and German and service sector PMI beat expectations. But you see France in here missed just slightly on expectations, and the composite data for the whole of the Eurozone missed on both the composite data on the composite and the services data, but just beat on the manufacturing data. So kind of a mixed results in here, so not particularly positive. And then going into this afternoon, we have that flash PMI data coming out from the US and Canada. So we're getting that later today at 9:45 Eastern time. The market, manufacturing, and composite and service sector PMI data for the US. Later on this evening, we get Australian CPI. Now, normally we wouldn't be looking at this too much, but I think it's worth watching because inflationary pressures are one of the major driving forces that we're seeing for the global economy. It's part of the reason we're seeing stocks under massive negative pressure in here over the last week, or throughout January, in fact, but certainly a more negative pressure over the last week. Those inflationary pressures, the interest rate pressures, all combining alongside, and we'll come to talk about that, the tensions on the Russia-Ukrainian border with the ominous threat of potentially war breaking out there. So we are seeing in here so that data we would certainly be going to be watching this afternoon. I'm going to click to the tab and go for this week now and run through some of the data, some of the important data points for the whole of the week to give us an idea of that shape of the week. Now, later on this week on Tuesday, we got consumer confidence data out of the US. Okay, and then I think though if we scuttle forward in here, what we're going to see is the most important things of the week in here. We get the Bank of Canada interest rate decision and statement in here, but more important on Wednesday, but more importantly the Fed. And we're really looking to the Fed now. The Fed's going to be the key point of this week. Are the Fed going to continue with their kind of more aggressive, hawkish stance that we've seen certainly since the end of last year and more intensely at the beginning of this year? Anticipation of 3, 4, maybe up to 5 interest rate hikes now this year. Expectation for the first rate hike to come in March, and then we're probably going to be getting a really strong warning that interest rate hike is coming in March at this meeting in here that we have on Wednesday. So that's going to be the critical focus for this week. Moving on through the week in here, we get durable goods data and GDP data coming out of the US on Thursday. That's clearly going to be in the spotlight. We're going to be keeping an eye on that. And then going into Friday, we get the PCE data, personal consumption expenditure data. Now the Fed tell us that the PCE data is one of their preferred measures of inflation. So we'll certainly be keeping an eye on that, given that the Fed watch that as a measure of inflation, and obviously all eyes on the Fed this week. So that's going to be important as well. But remember, that does come after the Fed meeting, which we have on Wednesday. So the big focus really this week is on Wednesday. Let's now switch to the earnings calendar. Remember when we go in here, I'm doing the filters, I'm ticking the filters, and we're going in. I only got it in here for the US, but we're ticking the 3 stars in here because we're only interested in the larger companies in here. So in here, we're going to go and apply that filter. And see what we've got this week. And we've got some really big names reporting this week. So far, reporting season, earnings season, not been particularly great in here. The financial sector not reporting particularly strongly. And we had Netflix last week with a big miss on its targeted subscriptions, expected projected subscriptions for Q1 of this year. So those have certainly been 2 negatives. Today, we get IBM. You can see the little moon over here means it's after the market close. So we get IBM. We'll be watching for that today. Tomorrow, Microsoft, Johnson & Johnson, Verizon, clearly Microsoft the big standout there. Wednesday, Tesla the big standout. And again, these are Microsoft after the close, Johnson & Johnson, Verizon before the open. We get Tesla, Abbott Labs, Intel, AT&T, and Boeing. Boeing, remember, makes up a big part of the Dow, so watch out if you're trading the Dow. They come on Wednesday. Thursday, one of the real big boys, we get Apple. On Thursday, Visa, MasterCard also on Thursday. And then Friday, we start moving across to some of the oil producers reporting. We get Chevron, we get Caterpillar as well. Caterpillar often seen as a big bellwether of the construction industry. So we'll be watching out for that as well on Friday. So a busy week. The standouts in the week in there, really, we have Microsoft, Apple and Tesla through the week. So we'll be certainly watching for those as we go through the week on that front. I just want to step back actually and just go back to the Trade Day member site. And just to let you know, guys, we had a redesign of the trading room. It used to be labeled the VTR, the virtual trading room. Now just the trading room in here. You can see we've got our heads up. We've got our scrolling news that we put up in here on a daily basis, either to do with the markets or anything that's particularly to do with the exchange and the systems, or if there's anything we want to report to you guys, we're going to put it up in here. So do check in and look at that. Here's the launch to the Trade-of-8 trading platform. So go into here and log into the simulation if you're on the 14-day free trial, or if you're on the evaluation challenge, you go in here, launch trading stream. Here's the morning meeting. Okay, so we're in here. You can click, if you click that, you'll be able to see me live right now. So you've got the morning meeting. You have the data release calendar, and then obviously you can hit the calendar here, and it pops out to the full calendar like we have here. So data release calendar. And the good thing now, I think, with the redesign in here, you can just see this from your dashboard in here, from the trading room. You can see not the dashboard, sorry, the valuation dashboard is a different page, but from the trading room in here, you can see you can go straight to the launch here. You can watch the meeting. You can see the data release. If you want to listen to our audio commentary, remember we have the live squawk breaking news audio commentary in here. You click down in here and you get free live squawk commentary. That's got good value to it, so do take advantage of that. There's the market chartist. That's my technical analysis reports. You can click on here and download the technical analysis reports. And then down at the bottom in here, one of our forums in here, our activity, where we James is posting here site redesign changes this weekend in response to feedback. So in here, you can have a little look in here, what's going on, stuff we've changed. And also there's a scrolling news feed in here as well that again comes from Live School. So so there's all of that now redesigned into that front page. Slight changes to the evaluation dashboard dashboard as well. If I just click on here, and you can see you've still got the dashboard at the top, but just slightly different as you go down. The evaluation challenge, what you need to know about, a little video explaining the objectives and the rules of the evaluation challenge in here, all on the dashboard page. So slight change to our setup in there. Let's get back to the webinar on the market. So what we've got going on, well, there's a couple of things in here. Eurozone, we've already covered this. The PMI data from the Eurozone, recovery stumbled in January. Omicron hits the service sector. But if we go in here, really the big headlines in here. So shares shuddered by potential Ukraine conflict. So that's what's capturing the markets at the moment. Now, on the stock indices, if I go back to the Trader trading platform in here, you can see the market was up here at one point today. So we had the massive sell-off in here. This is the NASDAQ, by the way, led lower by tech, but it's not just the NASDAQ. In here we go. Look at the S&P 500 breaking down, plunging lower, taking out these lows in here from December, getting closer now to these lows. Actually, these go all the way back to October. Go and look at the NASDAQ, really close to lows. So a topping pattern, a more negative bearish theme. But just going back to the daily in here, you can see in here, look, we're actually now below the Q4 lows in here from October. Lowest points in all the way over here since June of last year now on the NASDAQ this morning. But you can see at one point we were all the way back up here. We did rebound this morning. If I go into the intraday chart, say on the NASDAQ, you can see there was a decent rebound in here this morning. With this decent rebound in here this morning, impulsive rebound in here through the Asian session and through the European session. It's given that up already because of concerns about that Ukrainian-Russian conflict in here. So, and looking negative, setting up very negative. Not really much more to say on that. Same with the S&P. This just looks negative, right? There's the rebound overnight and boom, back lower. This is the 1 hour chart on the S&P. So all looking very negative going into today on that front. And again, look, so, this is what's grabbing the headlines. How a Russia-Ukraine conflict might hit global financial markets in here, so they're talking about safe havens. This little article in here, is it going to be, commodity markets, grains and wheat, food inflation, natural gas and oil, obviously a big producer, Russia of gas. So, at the moment we're already seeing a flight into the dollar. Forex Live, look, dollar extends gains as risk sentiment begins to sour. So Australian dollar in here, they've got getting smashed on the downside. The risk currencies doing particularly bad. Aussie, Kiwi, Canadian dollar, all doing bad in here. And then the pound, also they're showing here the pound down versus dollar. Everything pretty much down versus the dollar. The yen is still, as ever in here. The yen doing well alongside the dollar. So the dollar and the yen, the stronger currencies in here. The yen always seen as although the dollar is actually slightly up this morning against the yen, but last week dollar yen went lower, and dollar yen going lower obviously because of the yen seen as a safe haven currency. So, and gold continues to perform fairly well. Going to have a quick nod to gold in here. So go take a look at the gold chart on the daily chart. And pop this one out. So you can see with that impulsive breakout last week, the market did dip slightly on Friday, but then rebounding already this morning. So gold's still pointing high, and gold's doing well despite, remember, there's an inverse correlation between gold and the dollar. So the dollar is rallying, which would normally put then downward pressure on the price of gold because gold is quoted in dollars, right? So often when we see a strengthening of the dollar, like we're seeing at the moment, you'll see a weakening of the gold price. But at the moment, the dollar is strengthening because it's seen as a safe haven currency, and gold is also obviously seen as a safe haven. It rallies when we're in risk off mode, goes up when we're in risk off mode. So in here, gold rallying despite the fact that we have the stronger dollar in here. So gold still looking firm in here, having that impulsive break to the upside. Got a succession of higher highs and higher lows in here, and all looking quite bullish for me on the gold side. If we go take a quick look at oil, seeing as we're still on the charts in here. Actually, let's just take a look at the dollar, and you can see on the dollar index in here, strong session last week through the middle of the week, and then kind of marked time, Wednesday through Friday last week, and then again pushing higher the dollar this morning on the dollar index chart in there. Let's go take a look at oil. So oil, despite the setback in here, having had a strong intraday rebound in here back on Friday and trying to prod higher. So the underlying pressures for me on oil are still on the upside. And if we go to a 1 hour chart, you can see the market has rolled back over, but kind of put this tight pattern out and it looked more negative, but a strong intraday rebound, maybe pointing back to the upside in here for oil now. and then we've had another correction this morning, but then look bouncing back higher. So jury's out on this one. I wouldn't probably, I'll be really wait and see a little bit on this one, but certainly stocks looking negative and gold looking bullish. Oil, I think wait and see, but my leanings are more to the buy side, looking slightly more bullish in here. Let me go back to where were we? So we've gone through the calendars, we've gone through most stuff in here. I just want to do a little recap on the macro. So the war risk really hanging over markets, and Bloomberg's 5 things to start your day. I'm covering that. Also in here, talking about the PMI, concerns about growth with the PMI data out of Europe. Also a nod to Bitcoin. Bitcoin acting like a risk asset in here at the moment, the same as equities, correlated positively to equities at the moment. Not being seen as an inflation hedge, and selling off aggressively. Bitcoin now 50% down from its all-time high from November. And then again in here, the sell off Ukraine coupled with pressures on growth stocks ahead of the Fed Reserve. And they're just highlighting the Fed Reserve's meeting in here. So so that's kind of covering most stuff in here today, guys. Looking for any developments on the Ukrainian front. Now, remember, I did say often markets sell off ahead of a war, and when we get the war actually breaks out, you often see a rebound. Sell the rumor, buy the fact. So we may have been seeing that already on the equity markets. Watching out today on the earnings side, we have IBM after the close, and then on the data calendar side, keeping an eye out for that PMI data, the market PMI data, the services manufacturing and composite data out of the US later today. I'm going to wish you all a great trading day. Please don't go and check out the new trading room here, the new layout, and familiarize yourself with that. I'll be back with another bull versus bear webinar tomorrow and Tuesday. Until then, take care, stay safe, and have a great trading day.